everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook, where we take a look at our big six markets and formulate an attack method plan for tomorrow's trading. Tomorrow being the 17th of 17. I'm sure that's a lucky number somewhere. So when we're looking at the movement today, again, I hate to sound like a broken record, but man, it was another slow one today. We did have some good movement, more along the lines of scalping side. So if you were scalping today, you probably had a little bit better luck finding some setups, but if you were sitting on the sidelines waiting for some trades, you may have waited for a while. Even after you got into the trade, you may have waited for a while. It definitely was a little bit slower. Now, before we jump in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to add you to our email list so that you know every single time one of these videos comes out. Along with that, we talk about different stock setups, different, all kinds of stuff, cryptocurrencies, Forex, and anything under the sun. If it moves, we're looking to trade it. So great newsletter to get your hands on. And along with that, at the bottom of the page, we always have two different posts every day. We have the live trader morning prep levels that are posted every morning, giving you the major levels of support and resistance for that day. And then we have either a trade room example or a market psychology video where we dig into the markets and learn as much about them as possible. Now, if you haven't done so already, make sure to go over to the live trade room subscription and trial info and sign up for a day trial. See what we're all about, sit in on the room and, trade along with us. If you really enjoy it, you can jump on with a weekly or monthly membership option with a subscription. And of course, if you join as a full-fledged VIP member, you gain all of that access as part of the package. So you never have to worry about spending anything ever again. Now, looking at the Bund had some pretty good upward momentum towards the midday, but it couldn't take back all of the bearishness that they had to start the day off. We had a small little gap higher, monthly resistance held and dropped the market lower. They tried going down, and it looked like weekly support here at 160.29 was going to hold, but it did eventually crack down, and then immediately, as soon as it broke down, ripped all the way back up. But again, they did miss a new high, and that failure to make a new high is a big clue. Now, the fact that we've cycled all the way back down again with somewhat of a head and shoulders pattern, really kind of ugly looking one, it's almost like the market's giving you the finger there, we have a slight bearish tonality to the market. We're looking for a little bit more continuation of the downside, maybe not necessarily to break a new low, but at least attempt the lows. Kind of zooming in a little bit closer, we can see that this does sort of look like a flag pattern, and if we can get a break out of that flag, break below that rising area of support, come back and look for an area retest to sell back down again, that may be the attempt that we're looking for. Now, above us, we do have an area of resistance between 160.54 up to 160.60. In that location is where likely a lot of sellers are going to attempt to defend, given that that is where they came in last time. Now, that's not to say that we may not get a head fake above. In fact, a lot of times, those are some of the best setups, where you have a high, a lower high, and then they peak just above it, and then hammer back down. That could be the scenario that we're looking for sort of a W type of formation. But either way, we're looking to sell. It's just a matter of whether or not we sell down here on a breakdown, on a pullback there, or if we sell on a fake out of the highs. But either way, still looking to jump in on the sell side. Over on the euro, man, the euro is just on an absolute tear to the upside. It is not letting off the gas pedal, and today is another good example of that. Yesterday was also a really good rip to the upside, and today, it made yesterday look like it was almost non-existent. Today's rally was huge. We started off the day way down here, back around 1.1000, and we're up at 1,145. I mean, that's a massive rally. Looking from the beginning of the day, right, at midnight, we open up. And we rally all the way to the end of day. We had a high up here. That's 1,175. Now, if you're ever kind of curious as to how to figure the tick size out on the euro, take 1,175 divided by 5. That's 235 ticks. So 235 ticks to the upside here on the euro, and just a no-joke kind of rally. A lot of times after you get this kind of day, the following day goes into a range. Now, it's hard to say because yesterday we had a day like this. It went into a range for a little while, and then proceeded to break out for another 200 plus ticks to the upside today. So with back-to-back huge moves like that, the anticipation of seeing a range day sooner than later gets more and more apparent. So looking for tomorrow to be slightly more range-bound. We may just kick the range off in the overnight session with around this area. But either way, we have a bullish bias, and we're looking to buy cheap. So 108.36 down to 813. is the area of interest to become buyers. If we can get a little bit of a dip below that, down to 726 or even 611, I would really like to see that, but we may be in store for a little bit of a slow one tomorrow on the euro, so just play a little bit safe, but still leaning on the buy side. Gold, pretty consistent upward move today. A little bit kind of rangy, a little bit choppy, but for the most part, relatively solid bull channel on the way up. Now, the bull channel really kind of kicked off with a range, in all honesty, right? I mean, the range is pretty obvious here, and when they finally got a pop higher, it appears as though they found some area of support to bounce off of, and that gives us the channel top. And they blew through the channel top. Now notice what happened after they broke through the channel highs. They tried to go further, failed. Doji tried to go further, failed, started pulling back. Now this area that was resistance maybe turned support if they broke above it far enough. They failed, come back to it, we have resistance, come back to it, we have resistance. You can see what's happening here. We're starting to transition into a little bit of a range. The range high at 38.5 up to 39.1, range lows at 36.2 down to 35.8, and looking pretty solid. Overall, everything is lining up really well for this to transition into a range, and it would make sense given the fact that we went out of this range and just popped up into a new one. We seem to be kind of trending ranges at this point in time. So looking for upside continuation, but mainly just to get to the top of the range where we can look to start selling again. We do have a slight bullish bias, so I'd prefer to buy low rather than sell high. The selling at the highs that I would like to do is on profit targets, but it just depends on what opportunities the gold gives you tomorrow. So we might get a nice little pullback, maybe back down to the original range. That would be a nice area, and that would be back at around 1233. If that's the case, then we'll be looking to buy down there as well. But for now, we're looking to play this short-term range back and forth, and yeah, we'll go from there. Hopping on over to the bonds, yeah, is still lackluster, I think is the nicest way that I can put it. We had a big rally to the upside at 8 o'clock. Right after the open, it rallied all the way up to 152.03 and then just stagnated for the rest of the day. We had a little bit of a pullback. Major area of support on the 60-minute chart at 151.5, and if we get a little bit more of a pullback, if this does continue to range out, that 151.05 to 06 area is another big level of support and resistance on the daily chart. So we've got a lot of levels of interest that we can utilize to our advantage. We zoom out here because we are still range bound. We want to get a general bias, and overall, the general bias is bearish, right? Kind of weak and mostly range bound, but for the most part, in the grand scheme of things, we have an overall bearish tone with a slight bullish correction. And that's kind of the situation that we're running into right now. We have a slight bullish correction. We're cycling off of the top of the channel. Really what we would like to see here as proof that the sellers are taking back over is to break down a prior swing, break down with some conviction, not just like this little trap break right here. We don't want something like that. We want them to come down to this level of support, ping off it a few times, and then break, right? Really prove that the sellers are trying to break out, because right now, even though the longer term is bearish, we have to stick on the long side because the buyers aren't giving us a choice. So right now, looking to buy pullbacks, but with a mindset of the pullbacks are going to likely be short-lived, going with that longer-term trend. On crude oil is mostly range-bound, but with a slight bear bias, and we can see that nice bear bias working its way down in the form of not only the wedge that we have right here, but also in kind of traveling ranges again. Now, the traveling ranges, we had one right here. Arguably, there were smaller ones inside here all over the place. A little tiny one right there, and just a lot of back and forth. And we can see that not only by the candle formations being bull, bear, back and forth, but we can also see that with a lot of wicks on the highs and lows whenever they start getting near the extremes. Lots of wick being put up here, lots of wick being put in up here. Then we start seeing the same thing down at the lows. Lots of wick being put in, lots of wick being put in. We're showing them, basically, the buyers are trying to defend this low and, again, unfortunately, attempting to transition it into a range for some buying opportunity back up. Now, whenever we're looking at a range, again, we always want a general bias. So if we zoom way out, we can see this is a pretty big pullback area, right? This is the area that we got stuck in before on that huge rally to the upside. We're finally back in that area, and it appears as though the buyers are taking this as a reason to re-enter. Every single time it dips down into this area, it rejects it right away. So if we can start getting some bullish movement to the upside, get a nice little pullback, we may have a nice run back to the highs on our hands over the next few days. One thing to keep in mind, falling resistance in the form of not only resistance in that sense, resistance, but also a channel, and we may end up getting a little trap low and a test of the channel all in one shot, so one of those sort of kill zones. If we can get a little bit of a dip down into monthly support, that's at 48.22 to 23, that would be even better. So either way, we're looking to be buyers here in the long term on crude, and right now we're at the range lows on crude as well. So everything is lining up for potential longer term, a longer term possibility to the upside here on crude oil. And then finally on the S&P, the S&P didn't really do a whole lot today. We opened up here, and we are going to be closing right there. And on a daily time frame, that is a really ugly looking candle. Lots of wick on the top, lots of wick on the bottom, just a doji smack in the middle with a bearish body, and that's not really a whole lot to work with. So all of that back and forth really tells us that, as if it wasn't obvious enough, we're in a range. We're looking to buy low, looking to sell high, and we're looking to stay the heck out of the middle. And right now, we're pretty much right in the middle. So we need a little bit of movement out of this area to start buying at the lows or selling at the highs. Now again, with a range, we always want to get a general bias. So zooming out, we have a bullish short-term bias. And drawing up some channels here, we can see that we are pushing right in to that larger channel support. So if you want to know why we're getting this bouncing here, chances are that is your answer. So because of this secondary bounce, we had a double tap of that low. They tapped it once, tapped it again. I would love to see a trap underneath that for possible buying pressure. So looking at that low as a key level of potential reversal, that low is going to be right there at 95 3/4. So if we can get a trap underneath 95 3/4, a dip down into monthly support, and major support at the bottom at 93 3/4 up to 94 3/4, we may have a really good run on our hands back to the upside. So looking to be buyers, but preferably on a little bit of a trap or a pullback, just to kind of get the counter trend traders kind of suckered in, so we can shove the stops straight down their throat once again for a rally up. So that's going to do it for the outlook. Looking at the news tomorrow, we do have quite a bit. We have at 4:30 out of the UK, we have the average earnings index plus the bonuses. The forecast is 2.4%. Previous was 2.3%. Also out of the UK, we have the climate count changes for April. 7.5K is the forecast. The previous being 25.5K rather. At 5 o'clock out of the Eurozone, we have CPI coming out. That's the year over year in April for 1.9% forecast. Previous was also 1.9%. At 10:30, we have crude oil inventories forecasted at negative 2.360 million. The previous was negative 5.247 million. Keep an eye out in a couple minutes here for the API numbers to give you a slightly better clue in terms of what to expect. Tomorrow afternoon, going into the evening at 1950 out of the yen, we have the GDP quarter over quarter for quarter one, forecasted at 0.4%, above previous at 0.3%. And then out of Australia at 21:30, we have the employment changes forecasted at 5K versus the previous of 60.9K. So quite a big difference there. So plenty of stuff to hopefully keep the markets moving tomorrow. And, you know, it's a little bit of kind of a battling or contesting view. We have news and we have things to keep things going, but, well, we also have a relatively range-bound start to the week that may keep going as well. So we'll have to just kind of play it by ear. And that's why we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.